All right, for the next headline, Corey, we've got 4 lucrative tax deductions that seniors often overlook. So let's hear them.
4 of them. One is the extra standard deduction for someone who's 65 or older that meets the eligibility. There's an extra standard deduction for those folks. 2 is spousal IRA contributions. 3 is qualified charitable donations. And 4 is the Medicare premium deduction.
Nice. Yeah, these are actually overlooked. These aren't things that I talk about on a regular basis, Corey. So, I mean, again, they come up in client meetings. They should be coming up with their accountants, frankly. But
Correct.
so again, you get an extra standard deduction. So if you're not basically itemizing and you're 65 or older, you may be able to deduct more than what a standard deduction allows for. Is that what I'm hearing?
Yep, that's exactly right.
Good, good. And then if you're still working, even if your spouse doesn't work, you may be able to contribute to their IRA for them, right? As long as, again, certain income thresholds
Which helps
are met.
exactly.
Good.
And
Qualified charitable donations or distributions are a great thing for individuals 70 and a half or older. So again, that's something if you're in your 70s and you want to talk about it, let us know. And then the Medicare premium deduction. So talk about this one a little bit, Corey.
yeah, so if you are a retiree who is self-employed, which is a little confusing to think through. So if you are a retiree and you are self-employed, you can deduct your
Wait a
Medicare
minute, isn't that like a oxymoron?
I think so, yeah. But I think the idea here is if someone's retired or of retirement age is, I think, what the article is referencing when they say retiree. And if you're self-employed, if you are paying Medicare premiums, you may be able to deduct those, even if you don't itemize, and they are not subject to the same 7.5% threshold that healthcare expenses must make up for someone to be able to itemize them. So I would imagine that one is it's overlooked, as they've highlighted in the article, and it may be less pertinent for a lot of people, but it is a deduction nonetheless. And the last point I want to make, Jake, is I was thinking when I was reading this, why are these overlooked? Like the QCDs, for example, the qualified charitable donations. I would speculate that we've maybe talked about those 20 to 40 to 50 times on the show over the episodes, but they made a great point that our tax code in the United States is complicated. The rules about exemptions are constantly changing, and there's been 5 big tax law changes just since 2017, which leaves the average person ultimately not sure where to start in order to actually take advantage of the tax code as it's written today. So I'm glad that this was written about and wanted to make sure that we highlighted it.
Yeah, Corey, I think it's a great opportunity for a call to action. So it's December. We were running out of days for the year. Now is the time to book an appointment with a financial planner at Falcon Wealth Advisors. We can take you through our tax planning process. Now is the time to book time with your CPA or accountant to review these things. Now is the time to fire up your tax software. If you're a do-it-yourselfer, fire that sucker up now, and let's take a look at some things to educate yourself to make sure you are set up to pay the least amount of taxes in 2023, right? And then our planners, they're actually looking out 10, 20, 30 years for our clients. So they're doing more planning further out, but now is the time to do that. It's a call to action. Don't wait until April because you're going to be kicking yourself. You're going to be kicking yourself. Too late.